Good afternoon, everybody. John Gerard, Optimum Financial Services. Today's August 14th, 2023. We wanted to give you a quick market update and go over a couple of things that we are watching and what we might watch for as we go forward in time, and we'll just jump right in. Today, we want to go over what has driven the 2023 stock market update. Performance year to date. What's been driving it. And First, we want to look at earnings. Have earnings driven stock prices upward? Well, in the first quarter, earnings were down about 2.8%. We haven't quite gotten all the S&P 500 company earnings in yet for second quarter. We're getting close. But so far, they're running at about negative 5.1. And that's about where they are supposed to land, negative 5.1, negative 5.2. So first quarter, negative 2.8. Second quarter earnings are down about 5.1, 5.2%. So you can't really say that earnings have been driving the stock market upward. So what about inflation? Now, the inflation numbers, have been coming down very high last year. Inflation was very high last year. So inflation has been coming down compared to last year. So let's take a look at that. We also want to look at Federal Reserve and a look forward to possible inflation outcomes as we go forward. But inflation just recently came out running at 3.2%. Now, the Fed has a target of 2%, so it's running hotter than the target. But it's at 3.2. Last year, for 2022, inflation was at 6.5%. If you broke it out, food prices were up 10.4, and an 8.3% increases in prices for food away from home, 11.8 prices for food at home. But overall, the general level of inflation rose at 6.5%, and now it's running at 3.2. So a lot of people think, oh, inflation's slowing down, so maybe the Fed will become our friend again, quit raising rates, and in fact start to lower rates. That has a lot to do, we think, with why the stock market has been bid up so hard so far this year is because inflation is slowing, 6.5, running at 3.2. And we're going to talk a little bit about why that narrative may not hold up as we go forward. It may, but it may not. Just something to look at. The stock market since March. Now here is about the middle of March right here. This is about the middle of March. We've circled that because we're going to show you something important that happened. But we started 4,800 or so, but in a general decline. Now, the middle of March, it started moving. Now, lately, we've been coming down some. You can see we're getting close to the 50-day moving average. But since March, really has gone on a big tear. Well, what happened in March? Well, in March, you remember there were several banks that started going broke, becoming insolvent. It was the headlines, kind of scary moment there. As you can see, the stock market was declining while that was going on. Well, at the same time, after all this started happening, these banks started becoming insolvent and the government had to take them over. The Fed created a new program. The new program was called the Bank Term Funding Program. So these banks started going upside down, and the Fed created a new program, Bank Term Funding Program. You see that's about the middle of March. Now remember, we just showed you the middle of March. And here, middle of March, and $107 billion later, you get a pretty nice rally. Now we also are quick to mention that the ERC program has also been going on, and that has been several billions of dollars that have been injected into the system. Now, looking at inflation, we decided to look at inflation. These numbers come straight from the Federal Reserve website. Hat tip to Jack Gerard for creating this chart. So we wanted to look at 1970s inflation versus the current run of inflation to see if there might be patterns that we could notice. Mark Twain said that history seldom repeats itself, although it rhymes, and we think that you might see a little rhyme in here. So this blue line is the 1970s. Some of us are old enough to remember the 1970s. Remember, we came off the gold standard in the 70s. Watergate happened in the early 70s. So a lot of turmoil here in the 70s. And then we had an Arab oil embargo after the 7 Days War. Anyway, so all this happened in the 70s. Now, this is currently. Now, do you see any similarities here? We certainly see some similarities. Not that we think this is going to match what happened in the 70s exactly, but in the 70s, we had a really steep decline. Now, this was aggravated by the Arab oil crisis embargo. But here you can see ours. And here, just like in the 70s, it started coming down, and ours has started coming, inflation coming down. We just went over that. But look what happened. We think that some version of this may happen in the future. In other words, inflation may not be through with us yet. And so the Fed may not be able to come back and be our great friend and benefactor later on, like everybody thinks it is. Remember, that idea has sort of driven a lot of the bid in the stock market that, hey, the Fed's going to be our friend and they're going to cut rates, so on and so forth. We don't know that that's true. Inflation happens in waves, typically. Human beings think in linear terms of straight lines, but very, very rarely in natural systems do we see things happening in a straight line. They happen in waves and in cycles. And we think this may cycle back up. Now, it may not be quite as dramatic as the 70s, but the pattern may hold. And if that happens, the Fed will be hamstrung. They won't necessarily be able to be our friends again. So that's just something to think about as we go forward. Thank you so much. If you ever need anything or want anything, just give us a call. We appreciate your attention today. Thanks.